Good day, everyone. Ali Safi here from Safi Financial Network. In this video, I'm going to talk about some charts that can give us some good example of the bottoming or kind of like a pivoting for the market. So this is a skew chart, and as you see here, skew is kind of like a good, I should say, not leading indicator. It's kind of a good indicator for us to see if a market is pivoting to the downside or upside. So whenever a skew is topped, as you see here, this is May, July 2023. And after that, market went down to kind of like a 3 months corrective move to the downside and kind of like a bottoming in October timeframe. And as you see here, skew is just bottom here as well. Right now, we just got one of the biggest reversals since last July and even August. And that is kind of like a getting to some portion of the level that is topping formation. And whenever we get this kind of like a reversal, we should see some kind of like a bearish price action is coming to the market. And if we get down to this certain level, we can see the market is kind of like a bottom. For a good comparison, if we just add S&P 500 chart here, we can see some kind of like a better analysis what we're talking about. So this is S&P 500 chart, and as you see here, skew is kind of like a leading, and skew just formed the top here while market is going up, and this one is coming down. I mean, like the blue line skew is coming down. The market just had the final surge before its top in 2022. And then after that, in entire 2023, it's just coming down. In October 2022, market just formed a bottom for the initial phase for the rally. So this is another kind of like a warning signal that I'm just getting. Skew is reversing down while market is going up. So if this one continues to the downside, I should say skew is gonna signaling us to roll over for the stock market. And it's kind of like coming along with their analysis with the seasonality and also the S&P 500 weekly wrap analysis, which is provided 2 days ago. If you haven't looked at that one, so make sure watch that video as well. I just provide good analysis of different stock indexes and also individual names as well. So skew is down. That's going to be kind of like a signaling for S&P 500 to coming down as well. So this is first chart. The second chart is PCC, which is kind of like a put call ratio. I'm just looking at these levels here. Again, so if you just look at the put call ratio, it doesn't give us a clear signal for now. It's just in no man's land. It's not in kind of like a bullish scenario. It is not in bearish scenario as well. But if it goes down here, which is gonna be market is gonna surging to the upside. And if this one is coming down, this means the call ratio to put ratio is getting to danger. And it's kind of like a euphoric for the market. Right now, it is okay based on the PCC. So again, if I add this one, S&P 500 chart here, so you see that different cycles here. When market is getting to, let me just show here, when market is getting to the top. So you see that this is kind of like a bearish signal here coming down here. When market is getting just a bullish signal, this means S&P 500 is hitting the bottom here. So right now you see that when this one is coming down here again, I know it was not at the bottom, but this means a good surge is coming to the market. So that happens. And again, so when S&P 500 is coming down here, so we got a good signal, bullish signal. It's not that bullish, but it is at top here as well. So PCC is in no man's land. I would like to see PCCs coming down to my super bearish level, which if S&P 500 going higher, it can happen. Just that PCC is coming down, and that would be kind of like a great signal for us to get into a short position based on this, just because this is one of my good indicator, I should say, and it's working out pretty well at extreme levels. All right. The next one is market breadth. So market breadth, as you see here, market topped when breadth is pretty high. And it's kind of like a good correlation with the market. So here is the top for the market breadth. and this is a top for S&P 500. So this S&P 500 is coming down. For example, last October, it goes market breadth is going to pretty negative reading here. So 24 to 28 is pretty negative. And this means the breadth or stock above 200 moving average is pretty low. And this means market is pretty close to a bounce or at least a bottom, which was the case in October. So October market just formed a bottom, and look at the rally after that. So market just surged higher. Right now, breadth is getting back to kind of like important pivotal point, which just happened in January, top, followed by 2 months correction. So this is kind of like a 2 months correction in January. And also this is happening in July as well, followed by 3 months correction. Right now, we are just getting back here as well. So that's another signal that I'm just looking for. If it goes down, this means market is going to reverse very sharply, probably coming down to this test, this top as well, this breakout level. So that's another indicator that I'm just seeing that market is pretty close to its top, or if it is not topped yet, for a big corrective move to the downside. The next slide is going to be yield. So this is a yield curve, and everyone just talking about this when it goes to the negative, but it's been negative, it's been inverted for a while, and no one is talking about this because yield, when it is inverted, and this is one of the bearish reading that I've ever seen in yield. Like if you just zoom out here, you wouldn't see something like this. Even 2001 crash, we didn't get that bearish reading. 2008 crash, we didn't get that bearish reading. So this is September 19, 2019. And then you know that what happened in February 2020, COVID crash came up. But this is very, very, I should say, screaming that a big recession is coming. We just can't dream about the soft landing. I don't know how come people are talking about soft landing. Based on this chart, I should say we are kind of like very close to one of the biggest recession in the history of the market that we can experience. But again, timing for this is very, very difficult. I myself don't time it for this year. I should say 2025, 2026. Again, 25, 26 is gonna be probably 26 is gonna be very, very bad year for the market. But right now, yield is just getting back to the upside. And you know what happened when it gets back to the upside, and then it's getting to the normal after inverted one. So it's the recessionary signal. Let me again add S&P 500. So here is S&P 500 chart, the orange line. As you see here, when yield is getting inverted, we are at the top. So this is a top, and yield is getting back up, and it goes to the positive territory after inverted, market goes down to a recession. So this is another scenario in 2008. So this is 2001. This is 2007 to 2009. And as you see here, market just topped in 2008 and actually 2007 when yield was negative already in 2006. So for 2 years, yield was negative, and the yield curve actually. So when yield curve was negative, market didn't go to recession directly. It just forming the bottom here, then reversing to the upside. When it goes to the positive territory even, just above, market just start going down, roll over to the downside. This is a great recession. The next one is COVID crash. Again, COVID crash, we got yield inverted just here. But what happened there? So the market just surged to the upside for a final move before COVID crash happened. I remember it was September, but market just crashed in February, which was kind of like a 5 months, 6 months after that, right? So this is another time that we are seeing the same signal here. When yield curve is coming down, and it is down here when it's in down in 2022, 2023. and it just keep inverted here into the entire 2023. And right now, still, we are not above a positive, about like a 0%. So if it goes to the 0%, I should say after this moment, everyone needs to be careful because recession probably is coming after this, 2 to 6 months after that. So just wait for this one, because if this one gets above zero and it goes to the positive territory, we are heading down to a massive recession. So right now, it's okay. Still, it is negative. As I said, it can immediately go back up. And whenever it goes back up to the positive territory, you should be careful because recession is pretty close, probably at the front door. All right. So um, all above this, let's go to the S&P chart and see what I have done for the S&P chart analysis. So this is S&P chart, S&P 500 monthly chart, which is a bigger time frame. It's always good to have a monthly review, probably once a month or even bi-monthly. We can see that we are kind of like this is the area that I'm looking for as a like a market target for 2024, and we already broke above 5,000 area. We are just getting to 5,000, 5,100, then coming back down. I should say still 5,300 is going to be on my plate for just the final target, but I don't think that's going to happen in the next few weeks. So probably we'll get into the corrective move to here to test this breakout level. So there are two levels that we can see. One is just the top of the market in January, which just last January, somewhere around 4,800, 49, 4,800. But the biggest level, or I should say the better level that I have is just testing this breakout. So within the January time, we can see some kind of like January candle, I mean, we can see some kind of like, or December, we can see some kind of like a bottoming phase for the next surge to the upside. And I should say this is the area that I'm looking for the market top. And probably market will hit its all-time high in somewhere around like August to September this year. And after that, we are getting to the election season, and it's going to be uncertainty to the market. And when market is getting to the uncertainty, we can see some kind of like a choppiness. And then after choppiness, I should say, no matter who is elected for the U.S. Market will head into a recession, especially when rate cut is coming. And based on the yield curve, the one that I show you, most likely I should say rate cut is coming in late 2024. Probably massive rate cut is coming in 2025. And I just show you in my channel as well. So whenever we get any rate cut, so this means market is in a crash. So look at the history for the rate cut. I wish I had that chart, but I just posted in my channel, in my Telegram channel, which is Sophie Financial Network. In the history of 2000, I should say 1900 to 2000, whenever we get rate cut, market just fall off the cliffs after that. So it goes to the recession directly. Just be careful what you are wishing for, because rate cut, it doesn't mean that market is going to go up. They, I mean, like a Federal Reserve banks, they're going to announce rate cut for not a good reason. They're just announcing a rate cut just because economy is into trouble, and that's why recessionary period is always deflationary, and the stock market, different assets are going down just because recession by itself is deflationary. Some people are talking about stagflation or something like that. That's another case. It's not in my expertise, but I should say when recession comes, rate is going to go down, and probably stock market assets are going to go down. And this is the level still is going to be in a bullish trend. So if we just lose that one, you're going to go to a very, very massive level. So this is a 2008 bottom. So if you just connect these two to the low COVID crash, you just continue to this one. Still, you will be in a bullish time frame, I should say. Still, market is up, but that would be kind of like a very, very massive sell-off here, and that should be kind of like the biggest sell-off after COVID crash that market has been seen. So even worse than 2022. Just imagine how much pain did you cover in 2022. It's going to be the same scale, even worse in 2025, I should say, late 2024, 2025 to 2026. Everyone needs to just be careful about the market because, again, after this August, we are heading into kind of like a volatile period that market can experience one of the biggest crash in the history. All right. So we will see how it goes. Again, we are not forecasting. We are going day by day, week by week. And this is just my analysis. And of course, it can change. When market just gives us some levels, some development, shifting the structure, we can change our analysis. We are not solid into our analysis, but this is the way that I'm looking at least I was right for 2023 when everyone was bearish. We were buying a lot, especially later 2022, and we just got the fruit in 2023. Right now, I was bullish again after this corrective move, and everyone just saying, no, this is a 61% Fibonacci. If you just put a Fibonacci level from here to here, so you will see that this is kind of like a 61 to 78% Fibonacci. It goes down. Everyone just got again bear custom. I was bullish. I didn't expect market will have this phenomenal rally to the upside, but this is too far too fast, and I should say we are due for corrective move, and potentially correction is coming in months of I should say this week. If it gets like a worse, then we should see a big shadow on the monthly chart for February and months of March. We will see some kind of like a good correction for the market, which is gonna give us another buying opportunity, I should say, for the next rally into the summer time frame before the big crash is coming. All right. So this is kind of like my analysis for S&P 500. If you like this video, please smash the like button, subscribe to our channel, and have a good one. See you on the chart. Bye-bye.